Okay, good evening. Good evening, everyone. Yeah, highly welcome to today's class. And today we want to take not just to continue from where we stop. You want to start from top, from our topic ethics in financial reporting, because I couldn't share the last video, and due to my network was very poor. I want to briefly take it again, and I believe, is there any of us that went through the materials I shared? This material in question.
Yes, sir.
Okay. Though some things are self-explanatory, and we still need to be in class so that to hasten our understanding and make us understand better. All right. So before I go to the material here, let me be admitting someone. Um, I want to start in a way that is clear, practical, and exams focused. Those are the three concepts we are in class today. You understand, we know the how practical, how you can apply it, and the focus for exams where you can get it. So now I want to I like starting my classes with a brief question. Sometimes the question might seem rhetorical, but just have the picture of where we are coming from. And the question goes, if nobody will discover the manipulation, is it wrong to manipulate the financial statements? So this leads us to what ethics is. We said ethics refers to moral principles and values that guide a person in deciding what is right or wrong, acceptable or unacceptable. In accounting and financial reporting, ethics guides the accountant and management to provide or produce information that is truthful, information that is fair, reliable, and not deliberately misleading. So now linking it to financial reporting, if it was in taxation now, I am supposed to link this ethics to the course we are handling. In audit and assurance, there's also ethics. So you need to understand why they bring ethics to all these courses you are doing. Now, financial reporting, he said, is the process of preparing and presenting financial information about an entity to users, stakeholders at large, the shareholders, the investors, the lenders, government regulators, even the management, the employees. The purpose is to help users make informed economic decision. Now, merging them together, what is ethical financial reporting? What is ethical financial reporting? It means preparing and presenting financial information honestly. Now, I'm taking all the principles of ethics, okay, and putting in it in this definition is another way of merging it together. It means preparing and presenting financial information honestly, objectively, and in accordance with applicable accounting standards and regulations. So, also without intentionally manipulating information to deceive users. So, why does ethics matter? Financial statements are not just numbers, they are representation of reality. If an accountant deliberately changes the numbers to make a company appear more profitable, this is the outcome, this is the implication. Investors may invest based on that false information. Banks may grant loan they shouldn't. Government may assess wrong tax. Shareholders may make poor decisions for you to mislead financial information. The credibility of the profession suffers. So we have problems now, the common problems in financial reporting. These are problems. Sometimes it's a topic on its own. Okay. Now let me introduce this today. One of those problems in financial reporting. We have creative accounting, earnings management, manipulation of financial statements, fraudulent reporting, conflict of interest. We have pressure from management, mispresentation or omission of information. We have failure to comply with accounting standards. One of those ethical problems as well is bias in accounting estimates. We have insider or confidential information misuse. So if I ask us, a company's profit is 80 million. Management asks the accountant to record certain transaction in a way that makes profit. This is the example I used the last time, similar example. To make the profit appear, the normal profit is 80 million, but you are told to make the profit appear like 120 million because the company wants to obtain a bank loan. Sometimes you are a bank obtains loans based on their profit, so they need to make the profit sit in a way that they um the loan providers can be so certain and have confidence in giving this financial or in this loan. So now the question is, what ethical issue can you identify? The key issue is number one, the profit is 80 million, but you want to make it sit at 120 million naira, all in naira, sorry. So we have key issues like dishonesty in it because you are not honest, manipulation of financial information, misleading users, possible fraud. With this one action you are taking, there is violation of professional principles. There is also pressure from management. So ethics is the moral compass that ensures financial reporting communicates the truth rather than merely producing numbers that save someone's interest. Okay, now let's check why it matters in financial reporting. Number one, we say, remember the central idea is financial reporting affects decisions. Okay, therefore, if information is unethical, the decision based on it may also be wrong. So it matters because number one, to ensure reliability of financial information. Take the keyword reliability. Let me check the material we have. Why ethics matters. We have, okay, here is it. We have here reliability. Please confirm if you can see my screen.
Yes, we can, sir.
Okay, great. So reliability of information is, let's say, the users of financial statement must be able to trust information presented to them. An ethical accountant does not deliberately manipulate figures, does not conceal liabilities, excuse me, does not overstate assets or understate expenses. For example, if a company has 50 million in liabilities, the accountant should not hide 20 million simply to make company appear financially stronger. So ethics ensures that reported information can be reliable. That is why it matters. Now, when we say protect interest of users, let's use investor protection as let's use investor as one of those users. You know, financial statements are they are used by different stakeholders. For example, investors use them to decide whether to invest, bank use them to decide loans, government use them for regulatory and tax purpose, management uses them for decision making, even employees may use them to assess the stability of the organization. So if financial information is deliberately misleading, these people can suffer financial losses. So ethics protects stakeholders, not just investors alone. We are using, okay, let me use this. Let me use stakeholders protection. Okay, I think it's better now so that you will not center on investors alone. Okay, stakeholders protection. All right. So ethics protects stakeholders from decision based on false or misleading information. Now, prevention of fraud, prevention of fraud and financial manipulation. Ethical behavior acts as major defense against fraudulent financial reporting. Example, recording fictitious sales. Do you know what fictitious sales mean? Fictitious sales, fictitious inventory, fictitious as the name implies. Hello, do you know what fictitious, recording fictitious sales? Do you understand that? Is there no one that can?
Yes, we know the meaning.
What's the meaning? What is the meaning of fictitious sales?
Creating inventories or invoices for goods that are never sold. Recording of goods that were never sold.
Okay, let's continue. So what brought about this? We said it was under prevention of fraud and financial manipulations. Why ethics matters? It matters because unethical behavior or ethical behavior that acts as major defense against fraudulent financial reporting. We are trying to bring out some fraudulent financial reporting examples: concealing liabilities, understating expenses, recognizing revenue prematurely. Fraud may begin with small compromise in ethics. Don't forget, an accountant who first agrees to adjust one figure may eventually become involved in major larger manipulation. Okay, so we explain further the to maintain credibility in accounting profession. Let's use transparency as this word to maintain credibility. Like it builds public trust. Public trust. Imagine a situation where investors believe accountants routinely manipulate the financial statement. What happens? They begin to question financial statements, even audit reports. They will question professional accountants, companies. Therefore, ethical conduct help maintain the reputation and credibility of accounting profession. Sorry, now let me go further to the transparency and accountability. When we say transparency and accountability, ethical financial reporting requires organizations to be transparent about their financial position. Now, for example, let me highlight this. For example, management should properly disclose significant information rather than deliberately hiding information that could misuse users' decision. So transparency, differentiation to differentiate between transparency and accountability. Is online class, I would have asked. Transparency, users can see the relevant information. Accountability is those responsible for managing resources can be held responsible for how they use them. To support compliance with laws, now compliance with IFRS is not just IFRS, compliance with laws, regulation and accounting standard. If I can change this, okay, when you listen, you just know, you just broaden the importance. It's not specific or limited to IFRS alone. We can use laws, regulation and accounting standards. So ethics encourages accountants to respect applicable laws, regulation, accounting standards, professional requirements, organizational policies. So something can be technically legal but still raise an ethical question. This is a very important area of discussion. But let's move forward. You say it reduces conflict of interest. Okay. Now, for conflict of interest, accountant is involved in selecting a supplier, and one of the supplier is owned by accountant's close relative. We will look at traits when we keep going. So ethical behavior requires the accountant to recognize the conflict and take proper action. Okay. Now, I said I forgot to add this in before we go to these fundamental principles. I forgot to add this ethical dilemmas. Okay, before we go, let's check on, I think, okay, let's check on the principles and traits first before we go to the dilemmas. All right. Okay, from our material here, we have issues. Please don't forget all this issue. Create earnings management. I will take it as a topic. Earnings management will be made with creative accounting. How many of us opened the theory cover for SBR that I sent? Theory cover for SBR, all the theories. Did you get any material like that?
Yes, sir, we did.
Please go through it. If you understand all these theories under, this is just, there is all those theories that I've sent to you. There's no other theory you will see in your exams than what all I've sent to you. I think we've covered almost 70% of those theories. Okay. So, all right, and let's go into we define things, the importance, matters, importance and benefits. We said exam tip, fundamental ethical principles. We started with integrity. Okay. My system is okay. We said integrity. Should I go back? Let's speak on just read integrity. Sorry. We are trying to, okay, let me just read out it. I believe all of us were in our last class, though it was breaking. Let me bring it again. Now, integrity. We say integrity. Someone should read integrity for us, please. Integrity as one of the principles, number one principles.
Integrity requires a professional accountant to be honest, straightforward, and truthful in all professional and business relationships.
An accountant must not knowingly prepare, approve, or present information that is false, misleading, or incomplete. Integrity requires accountants to tell the truth, even when doing so may not be in the interest of management or the organization. Should I
Okay,
continue?
go ahead. I just want us to
Practical.
read so that as we are reading, you are understanding the integrity. It's well detailed here.
I should
Okay,
continue.
let me do this. Let me do this. Okay. We say integrity means what is right, even when there is pressure to do the otherwise, and even when nobody's watching. Doing the right thing when nobody's watching. So now, integrity in financial reporting. An accountant with integrity should present financial information honestly. Honestly, anytime you mention integrity, don't forget the word honest. Honestly, not deliberately manipulating accounting figures, not concealing material information. Integrity should not knowingly include false information. Integrity should correct errors when they are discovered. Integrity should resist pressure from management to mispresent financial performance. So we had example here. Example. Now a company, let me bring another example. Suppose a company actually made 10 million. Like the 10 million is a loss, 10 million loss, but the management tells the accountant capitalize these expenses. You know, when we expense, you know, when we capitalize, one is on statement of profit or loss, one is on statement of financial position. So the management tells the accountant capitalize this expense so that we can show a profit. The bank will give us the loan if they see a loss. If the accountant agrees despite knowing the treatment is inappropriate, integrity has been compromised. An accountant demonstrating integrity would instead insist that the transaction be accounted for properly and the financial statements are deliberately misleading. We will come to the dilemmas. The important distinction is integrity is not simply being honest when it's convenient. It is honest when honesty may come as a personal cost. So for you to tell yourself, I have integrity, it is beyond mere saying it. To display what integrity means, you might lose millions of naira, you might lose your reputation, you might lose promotion, but in the name of integrity. So when I say integrity is doing the right thing when doing the wrong thing would be easier or more profitable. Now for exams question, I remember the last time I said exams question scenario based, because ICANN may not specifically tell you to list all the ethical principles. They might tell you in your foundation stage, maybe your skill stage, but in professional stage, they will bring scenario based, sometimes centers on only integrity. And if you take anything that does not relate to integrity, ICANN is waiting for you to bring it in. That's why this class is as important as attending the class. So if they ask you question on integrity, please focus on integrity. But any scenario based question that present dishonesty, manipulation, concealment, mispresentation, or knowingly providing false information, please think one of those principles as integrity. If an accountant discovers that management has deliberately overstated revenue, deliberately, but management promises him a promotion, okay, they promise you a promotion if you keep quiet, which ethical principle is primarily treating. That is integrity. Okay. So having said integrity for the second time, we go to objectivity. Objectivity, objectivity, objectivity. Objectivity is, oh, I don't know if I should continue from where I stopped in, but Yoki, it's just another recorded classes. Objectivity means that the accountants, okay, someone help us, just as you read the last time, just help us read the objectivity. Objectivity number 2.
Objectivity requires accountants to make professional judgment without bias, conflict or interest, or undue influence from others. Professional decisions should be based solely on relevant facts, evidence, and applicable accounting standards. Should I continue?
Okay,
Okay.
okay,
Practical
okay.
application.
Go ahead, just finish it.
Okay. Practical application. The finance director asks the accountant to increase this year's profit so that management will receive performance bonuses. The accountant refuses because the adjustment has no accounting basis. Example, an accountant should not allow friendship with the managing director to influence accounting estimates or disclosures.
Okay, so thank you. Objectivity means making professional decision based on facts and evidence, not personal interest, based on facts, not based on emotions, not based on pressure or favoritism. Now, the objectivity in financial reporting. Remember, I said integrity in financial reporting. I mentioned integrity in financial reporting. Present financial information honestly, not deliberately manipulating accounting figures. Now, objectivity in financial reporting is you make decisions based on relevant and reliable evidence. Accountants should avoid bias when applying accounting standard. You, as a professional accountant, should not allow management pressure to influence professional judgments. You should identify and manage conflict of interest. For example, imagine you as an accountant asked to determine the appropriate value of an asset. You know that the asset is worth approximately 50 million naira, but the management tells you, please use 80 million. It will make our financial position look stronger. Now, this illustration, you can coin out integrity from this illustration. Understand the difference between objectivity and integrity. Because question will be asked, you don't have to twist it. So if the accountant accept that 80 million, violation simply means that the managing director's position, objectivity has been compromised. So the accountant has allowed undue influence to affect professional judgment. Now, another powerful example is, suppose an accountant, excuse me, please, do we have any other class today?
Yes, we
Yes,
have
we
case
have
study
another
by
class by
9.
9. We have another class by 9.
Hey, how can I take ethics for 3 classes? Hey, should I just rush? Should I not be detailed? Hey,
So we could do this today and finish up this week also now.
hey, let me not be detailed. Okay, okay, let's just read what is in the material, please. Let me not be detailed. But I wanted you to spot the difference for all of this concept, because in exams, sincerely in exams, they can bring question that leads to objectivity, you write integrity, and you may not get your full marks. I know, I'm telling you out of experience. ICANN knows that this topic is very simple, but in fact, ICANN is not happy. They don't want you to earn their marks. So they will try all they could. But let's focus on the material. If you don't have to, let me spot the difference between integrity and objectivity. Objectivity is impartial, integrity is honest. Integrity asks, am I being truthful? Objectivity asks, is my judgment free from bias? Now, I mentioned professional competence and Duke. Without looking at the board, can you remember what I said about professional competence and Duke? In our last class, just one word.
That an accountant should be knowledgeable enough in all his dealings.
Um, there's one keyword I wanted someone to tell me. Okay, I said that professional competence and UK. Remember when I said they are merging two things together? That's why they put that "and". So it's just like before and after. Do you have the competence when you gain this? Assuming they give you a role now, do you have the competence, the skills to embark on this role? Now, after you know that you have the competence, you have the capacity, the next thing is how, when you gain this, when you have this role, you have to be diligent with it. That is just the concept of professional competence and UK. And UK, as the name implies, professional competence and UK. If you can remember from our foundation, I don't know, remember Duke, the concept of Duke. Now, professional competence means that having maintaining the knowledge, skills, and expertise required to perform a professional work properly. So, an accountant should know that should know what he's doing and keep learning as an accounting requirements change. You need to stay updated. So, for example, an accountant preparing financial statements should have sufficient knowledge of IFRS requirements. Now, for Duke, that is competence. That is competence. Is divided into professional competence A and Duke B. Duke means acting diligently, carefully, and in accordance with applicable technical and professional standard. Competence means knowing what to do. Duke is doing it carefully and properly. When you read, you understand the concept. If I ask you, how can accountants maintain professional competence? Remember, you should keep up with changes in accounting standard. Know when they change from IAS 1 to IFRS 18. Stay updated. In fact, know the date they are going to implement. Know when they are working on it. Know when they are doing the exposure draft. Just stay updated. You need to attend relevant professional training. Just build capacity. It's just all about building yourself. Seek specialist advice when necessary. Understand relevant laws and regulation. Tax reforms, that is just professional competence. So what happens when competence and UK are ignored? You know the treatment. It will result in poor accounting treatment. If they change from, let's say, withholding tax from 2% to 5%, or it has been changed, you keep on doing that in your entity, or as the case may be, there's the implication. That is the competence. Stay on the field. Stay relevant. Okay. So principle here, integrity means to be honest. Objectivity means be unbiased. Professional competence and UK means be knowledgeable and careful. Confidentiality means protect information. Professional behavior means comply with tax, laws, and regulation. So just know that competence means no. UK means apply carefully. Are we together? If I should explain further, well. Okay. So this is just professional competence that I just explained. You have the material. I shouldn't use the material to explain anything here because it's with you. The problem with UK is just because the problem is lack of diligence, not knowledge. It is not knowledge. For the problem of UK, it is not lack of knowledge. You know it, but you are not diligent in your work. Confidentiality, confidentiality, confidentiality. Accountants should not disclose confidential information to people who are not authorized to receive it. What kind of information is confidential? You know, accountants have access to financial statements before publication, salaries and employee information. Accountants have access to company profits and losses, bank details. Accountants have access to tax information, customer information, trade secrets. So now I say, does information mean accountant must not never disclose information? No, very important. Confidentiality does not mean that accountant must keep every piece of information secret forever. We have situations. Disclosure may be appropriate or required when, number one, required by the law. Don't forget. Number two, required by a professional or regulatory authority. Number three, there is professional or legal duty right to disclose. Number four, the client or employer has authorized the disclosure. So just know that confidentiality is not absolute. Another important point is confidential information should not be used for personal advantage or advantage of a third party. What am I saying? An accountant should use confidential information or shouldn't use confidential information to make personal investments or help a friend to make money. Just be professional in the field. You don't have to harm a competitor. You don't have to obtain unfair business advantage. Now, we say confidentiality. If you want to look at confidentiality versus integrity, confidentiality versus integrity, some students used to get confused between confidentiality and integrity. Integrity means I must be honest. Confidentiality means I must protect information entrusted to me. Confidentiality is just keep information safe. Because the accountants, like, these are the safeguard. We have safeguard to confidential, even if time is permitted. Okay, that's why I don't like jumping over topics, because sometimes I may skip what is even more necessary or important. All right. So we have summary. Use this summary, okay? Use this summary to get the concept. Can someone help us with this summary? Just stay as it is, and from the ethical principle, meaning an example. Anyone from the screen?
Integrity means to be honest and truthful. Example, refuse to approve of misleading financial statements. Objectivity, avoid bias and conflict interest. Reject pressure to manipulate profits. Professional competence and due care. Maintain knowledge and performance work diligently. Apply new IFRS correctly.
That is under
Confidentiality.
example. Do it like this. Do it like this, bro. Sorry. Do it like this. Okay. Just when you want to go to the meaning or you read meaning, when you want to go to the example, state the example first before you read what is under example. Do you understand? I know we are looking at the screen.
All right. Okay.
Continue from where you stop. Just continue from where you stop.
Okay. Confidentiality. Protect confidential information. Meaning, protect confidential information. Example, not disclosing sensitive company information. Professional behavior. Meaning, comply with laws and uphold the profession's reputation. Example, prepare report in accordance with IFRS and ethic standard.
Thank you. Please don't confuse yourself. You can mute your mic. Please don't confuse yourself between applying IFRS correctly and preparing reports in accordance to ethical standard. Don't confuse yourself. Don't mix the example. What I'm trying to say is you should not mix professional competence. Okay, don't mix professional competence, or don't take it as professional behavior. I can know why they split it. All right, so we can go through the example here. From said example, remember, one scenario can take more than four ethical principles. Just that's why I brought it here. Example, a finance manager instruct chief accountant to delay organizing. Please read this. Let's just take this example now, and so that we move forward. Practical example. Please read. Let me admit someone now. Read the practical example scenario. Hello.
The finance manager of ABC Limited instruct the chief accountant to delay recognizing an impairment loss because the company wants to report higher profit before applying for a loan. The chief accountant knows that the impairment should be recognized immediately under the applicable accounting standard. Required, identify the ethical principles that are threatened and advise the accountant on the appropriate course of action. Suggested answer. The
Yes,
following principles
go ahead with the solution.
the following principles are threatened. One, integrity, that is the payment would result in financial statement. Two, objectivity. Management ensure pressure may influence the accountant's professional judgment. And the last one is professional behavior. That is, failure to apply with accounting standard may bring the profession into dispute. The accountant should explain the accounting requirement to the management, refuse to prepare the misleading financial statements, document the matter, and where necessary escalate it through the appropriate governance channels in line with the organization's principles and professional obligations.
Please just read these exams tips.
Okay, exam tips. In ethics question, I can examiner award marks not only for identifying but explaining why it is threatening an appropriate professional response. The facts presented in the scenario.
Okay. So you now see why sometimes somehow students now, after you write your exams, you say I've written, but these are the key things that makes you gain your marks other than the SBR. So we want to discuss it. In our class we normally go for break, whether you like it, you need the. That's why I was asking if you have another class. Now the ethical traits is what we want to discuss next. Ethical I think we have 5 traits. This is where the confusion comes on. Understanding this, where we have we need proper understanding between self-interest rates, especially self-interest rates and interest. We say self-interest rates arises when professional accountants hello hello
Hi, sir. We can hear you, sir. We're following you, sir.
okay.
We
You
have
said
less than 15 minutes, Abby. 10, 5 minutes, I think.
I think we have 11 minutes also. So that
11.
your mind will just be stable. For you to have stable mind in the class so that you'll not be timing, checking the time, and also focusing on the lectures. It's better all of us join at once from here. Okay. It's better we join. Hello.
And we should leave this one and join the new one.
Okay, can you hear me? Hello?
Hello.
All right. So we were in ethical traits. We said ethical trait is, let me admit some. Ethical traits said there are circumstances is and relationship or relation. Can you all see my screen? Oh, hi. Okay, ethical traits. You say is a circumstance or relation that may compromise or appear to compromise an accountant's compliance with ethical principles. Anything that may compromise all those principles, the objectivity, the integrity, professional duty, professional behavior. So we have 5 types of ethical traits. Number one is self-interest traits. We have self-review traits. We have advocacy traits. We have familiarity traits. We have intimidation traits. You can use this short form anytime you hear traits, SAFI. But for the principles, please, for the principles, just say it as it is. Just say it the way you start from integrity. I said it initially. In case you are asked in exams to list them. So, traits. Number one is what? Now, which
In one,
number one is what? Number one trait. I want to explain.
self-interest trait.
Self-interest, you say it occurs when accountant, financial or other personal interests. I'm trying to share my screen. We said cause accountants, financial or personal his professional job, so entitled to a bonus based on his reported profit, therefore has incentive to overstate profits. So his personal financial interest threaten his objectivity. Remember objectivity. So just think of self interest rate as what do I personally gain? That is for self interest rate. Now for self review trait, it's just like reviewing your work. Accountant prepares a company's financial statement and later Hold on, please. Let me reshare my screen again. So we said self-review traits. You say it occurs when accountant has to evaluate or review the work that he previously performed. For example, an accountant prepares a company's financial statements. Accountant prepares a company's financial statements. Let me end
My network was going off and on, so I don't.
Okay. So I said this scenario, if you are offered a gift, if you are offered a gift as an accountant, a vendor offers you a gift, what will this create? What type of traits? Okay,
That's
great. My screen is
familiarity
being
there.
shared now. You can see my screen. Hello, can you see my screen?
Yes, we can see it, sir.
All right. So we are trying to check okay. Let me use this. I asked a question, but the answer to what I asked was it will create number one, self-interest traits, number two, familiarity traits. We were trying to discuss the safeguards, but I just wanted to dance around this, but the possible trait first. Now, what is the safeguard towards this? If you are offered a gift, either number one, you refuse the gift because you think of the trait it will create, regardless of the value, whether it is of high value or low value. You refuse the gift, report the situation to the appropriate authority, remove the accountant from the procurement decision if necessary. You follow the organization's gift and conflict of interest policy. This aim to ensure the accountant's objectivity in two broad categories. You have let's let's focus let's focus on the safeguard. See, we have creative accounting here, all those topic on. Let's focus on the safeguard. Okay, we say we have categories, two broad categories of safeguard. Safeguards created by the profession, legislation or regulation. Number one. Two, environment. Don't forget this two aspect of safeguards. Under this, you have different pattern of safeguards, but it is grouped into number one by the profession, by legislation, by law, regulation. Now, you say these are safeguards. For the safeguards created by profession, they are safeguards established by wider profession. For example, professional education and training. There's a safeguard continuing professional development, corporate requirements, regulatory oversight, legal requirements relating to financial reports are safeguards that create an environment that encourages ethical behavior. Number two is what? Number two is what? Are we even together? I try to match the two safeguards that you can, might not be in your notes. I'm just bringing it. I said number one is by the profession. Number two is what? By in the work environment. In your work environment, measures established by the organization, by employer, by professional firm. Example, we can have safeguards under internal control, independent review of important judgments. Okay, we can have safeguards as policy on conflict on interest, policies on gift and hospitality. So whichever transaction that may come in, you have already have the policy, you have already have a guideline ahead. Now let's use management pressure for example. Imagine the finance director tells an accountant, increase the profits or you will lose your job. That is intimidation trait, right? Now, what is the possible safeguards under this intimidation trait? The accountant could, number one, the safeguard, discuss the matter with appropriate senior person. Consult the organization ethics and compliance function. You seek professional advice. Are we together? You document the circumstances. This is under traits, under safeguards under intimidation traits. A very important principle I can share now: safeguards are not simply about finding a way to continue working. Safeguards, the accountant must first ask, can this trait be eliminated or reduced to an acceptable level? So if yes, apply appropriate safeguards. How about if no? The accountant may need to decline. You may need to withdraw from the assignment. You may need to take other appropriate action depending on the circumstances. So for accountants, complete ICANN framework. For ICANN, we have 4 steps under safeguards. How you can answer your question under safeguards of trade. I would have preferred you just bring your pen and paper, just write the steps. Are we together? Hello?
Oh, we can hear you.
Hi, I thought you were going to give us the slide.
Please continue.
Okay. Number 1 is identify the principles at risk. 4 steps. 4 steps. Okay. Number 1, identify the principles at risk. That is, you need to know which risks or the principles that is at risk. Is it objectivity? Is it integrity? Is it confidentiality? You need to identify. Number 2, after you identify the principles, you identify the traits. Is it self-interest traits? Self-review traits? I'm just giving you a guide how you can answer questions under these ethical principles or ethical traits. Is it familiarity trait? The next is you identify appropriate safeguards. What action can reduce or eliminate this trait? Just follow it as a guide. Now, step 4 is if the trait can be reduced, you take appropriate further action, which may include, I said, either you decline or you withdraw from the engagement where applicable. Now, an auditor, a simple example or a simple question: an auditor has been auditing the same company for many years. He has developed a close friendship with the managing director because he has worked for so many years and now finds it difficult to challenge the MD's accounting decisions. What is the trait here? This is familiarity trait. Familiarity trait. That is familiarity trait. You are familiar with the MD. It's not self-interest. It's not self-review. Because you have been in a if you go to your material, someone just told me now, you have the material, I should focus on the explanation, and that's fine. So the question I asked, you cannot challenge your MD's decision. Now, from the step I've told you, number 1, which trait, which principle is affected now? How you can answer that question? Number one, I said principles at risk. Which of the principle is at risk?
Not the
Conflict
account.
of interest.
Hey, conflict of interest. Well, I did not state it under prince. We have 5 principles, ethical principles, which I said you should start from the top to the last. So you are taking me to trying to describe what familiarity trait. So are we together?
So I'm confused.
We are together.
Yes, I know you are confused because this is how the exams is very confusing. That is why I took time to explain okay, you understand. Can you list the principles, ethical principles? Just list them. Candy, you are confused. List the ethical principles. Can you unmute your mic?
Okay, is it objectivity, integrity, conflict?
Okay. So I was saying the 4 steps you can answer question when your confusion comes. You have to identify. See, this thing is like a process. It's like you want to cook, you have a process. Number one, we have ethical, we have under ethics, we have these are the major things you need to know and understand clearly. You know the principles, you know the traits, you know the safeguards, sometimes the dilemmas. So when I say number one, the framework, okay, 4 step framework. Number one, I said you need to, there is no question that will not affect or that will not tamper with the principles. Remember what trait? I said trait is when it compromise with the ethical principles. So no scenario that we will not link to one of those 5 principles. No scenario. I said number one, identify the principles at risk. Number two, identify the traits. Number three, identify appropriate safeguards. Number four, if the trait cannot be reduced, what can you do? Those are the 4 things to gain your full marks. So now I brought a question. I said, an auditor, how did I even put that question? Okay, I said, okay, imagine an auditor in a company. Okay, you have been auditing this company for so many years, let's say 4 years, 5 years, 6 years, 7 years, as the case may be. You've stayed for so long. Now, you have developed, in between all these years, you have been seeing your managing director or your boss for a long period of time. You have developed a close friendship with the managing director, the MD, and you find it difficult to challenge the MD's accounting decision. I now ask, which principle is primarily affecting? Which of those principles that we listed, from the integrity, objectivity, professional duty, confidentiality, professional behavior? I now said, which of them?
You won't be objective. You won't
Integrity
be
and
objective in reviewing
objectivity.
your work. No objective. You can't be objective because you are already familiar with that person.
Now is objectivity, because you are biased in your decision. It does not lead to integrity. That is why I'm saying, you see this, you see this epic story is a very tricky one because you need to differentiate between integrity of, like, know it so well. However they want to twist the question, just know that, hey, before they even complete the sentence, I know you are talking about objectivity. If you are too familiar, just know that familiarity links to objectivity. So when it comes to traits, you know it's familiarity trait. When it comes to principle, you know that this is objectivity as a principle. It tempers with objectivity. So when we say that scenario, number one, you identify the principles. That is objectivity. Now, what is the trait now? I already mentioned this is familiarity trait. What safeguards could be applied? Independent review. These are the safeguard, the solution. Rotation where appropriate, you rotate. Now, let me just tell you, in my place of work, okay, we are the carry agents to Global Fund, right? We have these portfolios that we to eradicate. Okay, we work portfolio on NMEP. We have three portfolios: malaria or project. We have malaria, we have HIV, and we have tuberculosis. Is from at the eye to the global. Are you please, can you hear me? There's something that's reflecting on my screen now. I want to know if you can hear me.
Yes, we are hearing you.
Okay, great. So now when they engage these professionals, right? They engage these professionals, immediately you'll be taken to, either you work under NACA or you work under malaria, but the same thing. Okay. Now I'm speaking on the rotation now. NACA, you work under period of time. You familiarity and this now have the picture that they are in different. Okay, let's say in Naka now, Naka is in zone 6 or zone 4, have NTBS. Okay, we now have malaria in, let's say, zone 2, different office location. So if you are working in zone for period of time, the people around you, they can influence, they can give you gifts, you can do your personal, like you can be so familiar with them. This is one of those traits. Now, what is the safeguard? I said independent review, rotation where appropriate. So at some point over the years, over a year, you will just see they will call a meeting, because we normally have a meeting, or you just see the board from above. They say, hey, George, you are no more working under NACA. You'll be going to NTBLCP, regardless of where you are staying. You need to adjust, because they are trying to avoid that trait of independence. So I said safeguards under this familiarity, independent review, rotation where appropriate. That's why I brought that statement. Consultation with another professionals, or removing the individual from the relevant engagement responsibility. So why I brought this is, identify an ethical trait is only half the job. A professional accountant must know how to respond to it. That is why I brought that. What I am saying now, what I am discussing now, is just safeguards. When you reach the safeguard aspects. Now let me speak on response to ethical traits. When an ethical trait arises, the accountant should not ignore it.
Physical traits. I mean,
Can you hear me? Who cannot hear me?
We can hear you. Go ahead. We can hear you.
Okay. So now I want to speak on the response on ethical traits. We say when an ethical trait arises, the accountant should not ignore it, right? The accountant should use professional judgment. Now, number one, you identify the traits. How will you identify? Ask, what circumstances is threatening my compliance with ethical principles? I'm explaining further. For example, management is pressuring you to manipulate profits. What type of trait is this?
Intimidation.
Intimidation trait. Thank you. Now, when you evaluate the intimidation trait, you evaluate the significance of the traits. You don't just identify, yes, we know it's intimidation trait. Now you now ask, is this trait serious enough to affect my professional judgment? So you consider factors such as the nature of the trait, the seriousness of the situation, the relationship involved. You consider the potential consequences. You consider whether a reasonable, informed third party will consider your judgment compromise. Now, after doing all this, after identifying the traits, evaluate the significance, the next you apply the safeguards. You take appropriate action to eliminate. I think our class will end with these traits, because the next one is just another topic, creative accounting, management, commentary. It's very simple. I will discuss. So I'm speaking on applying safeguards now, right? The next one is you apply safeguards. Take appropriate action to eliminate. Remember, safeguards is either you eliminate it totally or you reduce it to the acceptable lowest level. So you eliminate those traits. How? These are one of those safeguards. Discuss the issue with the management. You are bringing safeguards. Consult an independent professional. Seek advice from ethics compliance department were independently reviewed. Now you remove yourself from the decision. You follow the relevant organizational policy. If the policy, definitely, there are some policies, there are some manual that speaks on intimidation, but sometimes it's just document. It is in your responsibility to go and tell them, hey, before I join this entity, before I join this place, this is what this document is saying. This is what this manual is saying. Can we apply so this? Remember, we are talking of professional competence. So now, after you must have done all these things, you document it. Still, in my place of work, they say if it is not documented, it is not done. Whatsoever you do, even if you want to make inquiries with the primary recipients, even you want to make inquiries with your contractor or your vendor, even if it is verbal, you have to tell the person, oh, you did not apply your supporting document. This is this is that. They said, oh, I'm going to apply. They said, send a mail. Why do you send a mail? Copy me, just send a mail. Because we are going to print out that mail and attach to your documents. These are parts of the documentation. So you document the matter with appropriate documents. You document the circumstances, the ethical trait identified, the discussion held, the safeguards considered and applied, the decision reached, and the actions taken. This is particularly important where the matter could later be questioned. Now, the next thing is, having done all this, decide whether to continue. After applying the safeguards, if the trait is reduced to an acceptable level, continue the professional activity. If the trait remains too high, take further appropriate action, which may include, I said, declining or withdrawing from the assignment or relationship where applicable. Now, for exams approach, when you see an ethics scenario, please don't jump straight to the answer. Use the sequence. Number one, the principles, just as I said, the principles, the traits, the safeguard, and the action. Use these 4 keywords: the principles, the traits, the safeguards, and the action. For example, when I say management threatens accountants, objectivity is threatened, intimidation threat, escalate, consult independent review. If threat cannot be reduced, take appropriate further action. Another example is an accountant's close friend is the finance director. The friend asks the accountant to approve inappropriate accounting treatment. What should the accountant do? ICANN will just come and ask you like that without linking it to any trade. Accountant's close friend. Now, from the nature of the sentence, from the nature of the scenario, you know where this trait is coming out from the definition of integrity, from the objectivity. You will just understand it. When you see the scenario, you know where it dances to. So now, the accountant's close friend is linking to what principle?
Familiarity trait.
Principle.
It could be objectivity because it's a friend. They won't be
Yes.
bias, objectivity.
Objectivity. So another thing, please, don't mix traits with principles, please. Whenever you hear principles, don't mix it with traits. It's a very different thing. Though the link, one trait is what compromises the. So you need to know that somehow we have self-review traits. Now, you can link self-review to integrity. You can link self-interest to integrity. Do you understand? Just know how you can link it to a set trait. It's different thing, but link them. So the trait now is familiarity traits. The principle is objectivity. The safeguard is independent review. Remove accounts from the appropriate. So the key message I can give now is a professional accountant should not merely recognize ethical traits. I repeat again, I'm coming back in another version. The accountant must take appropriate action to eliminate it or reduce it to acceptable level. Are we together? Now, let me discuss, if time permits, let me just discuss ethical dilemmas. Is different from ethical traits. Now, we know what dilemma, okay. Ethical dilemma occurs when the professional is faced with situation when they are completing or competing ethical considerations, making it difficult to determine appropriate course of action. Ethical dilemma is in financial reporting. Accountants may know what is ethically right, but you face pressure, you face personal interest, the loyalty, you face financial consequences and other consideration. That makes it difficult for this thing, but there are factors that you can you need to, you cannot you just check in between. Dilemma, when we say dilemma, is you are in between. You are in economics, we call it indifference. When a consumer is indifferent, you don't know which decision to take. All right. A simple example is an accountant. Please, anytime I mention you, just know that you're an accountant. You discover that the management has deliberately overstated revenue. Now, you know that truth is to report the correct figure, right? But the management says, if you correct it, the company will lose its bank. I'm using initial illustration I was using. Now, the accountant faces difficult situation. Now, the question I'm expecting someone to ask, what is the difference between ethical dilemma and ethical traits. Okay. Can you hear me?
Yes, we can hear
Yes.
you. You are breaking.
All right. Okay. So I'm trying to bring out differences. It's something very similar. What you understand by trait and dilemma. Ethical trait is a circumstances or relationship that may compromise compliance with an ethical principle. Remember, we discussed that. Think of this way. What is putting my ethical behavior at risk? That relation trait, right? You have financial interest in the company. That is own work. That is self-review trait. You are too close to the client. That is familiarity trait. Now, the ethical dilemma is the difficult situation or decision where accountant has competing consideration and must determine the appropriate course of action. Now, think of this. Remember, putting think management and manipulate profit to secure. Dilemma is, do I obey management and potentially protect my job or the company, or do I report the financial information truthful? The trait could be intimidation trait because management is putting pressure on you. So okay, ethical traits is a risk to ethical is a difficult being decisive, and it is anything. Ethical trait focuses on what threatens you. That on the other side focuses on what decision you face. Ethical trait is can arise from a relationship or circumstances. Dilemma arises when competing decisions make actions difficult. Now, of ethical is self-review, familiarity. Example of dilemma is whether to report manipulation, disclose information, refuse management pressure. Way to remember this, easiest way to remember this is trait is pressure and risk. Dilemma is difficult choice. They can occur together. Dilemma, should I expose the manipulation or keep quiet? If one asks, what type of look for self review, advocate, validation, accountant facing ethical dilemma is the accountant facing, explain the choice and ethical consideration. Remember, one does not replace the other. And be that all complex and ethical dilemma. Please together, let me go back to ethical dilemmas we have. Is
We are together.
so we have ethical dilemmas. Number one, we have pressure from management. Number common dilemma. Number relations of statements. Now you can agree with me that conflict of interest is under ethical dilemmas. Conflict of interest, we have confidentiality versus disclosure dilemma. We have personal financial interest. When I say pressure from management may pressure you to increase profit, delay expense, hide liability, likely intimidate interest. Now, manipulation of his statement, you may it normally deals with this issue when we manipulations of financial statements, it deals primarily with integrity, objectivity, and professional competence and duty. Those three principles. Because accountants may be asked to use accounting estimates or treatments deliberately designed to make the company's performance appear better than it really was. Now, let me speak on conflict of interest and the third ethical dilemma. Conflict of interest. Accountants may have a personal or financial interest that conflicts with professional responsibilities. For example, the accountant participate in selecting a supplier owned by close relative. Interest under familiarity and self-interest traits. Please don't confuse yourself. Let me not bring dilemma that confuses you totally with traits. Please. I took time to explain the differences between the both. When we say confidentiality versus disclosure, the dilemma, accountants may possess confidential information but discover something that should be reported to an appropriate authority. So the accountant should consider, is disclosure prohibited, permitted, or is it required? Always remember, confidentiality is not absolute. You know what I'm talking about. If confidentiality is not absolute, you know what that means. We have personal financial interest as the number 5. Accountants may benefit financially from a particular accounting outcome. For example, bonus depends on achieving a specific profit target. So the accountants may therefore be tempted to manipulate reported profits. This is self-interest rate, right? Now, how should an accountant handle ethical dilemma? Before I can give like 5 minutes also to ask question if necessary. Number 1, okay, the steps. Let me just say steps or approaches. When I say you stop, identify, evaluate, safeguard, and act. Stop, identify, evaluate, you safeguard, you act. When I say stop, don't immediately act under pressure. Stop. Just stop. Don't immediately act. If you are under pressure with your management, just stop. Don't do it at that time. Now, when I say the next one is what? Identify. Identify the ethical principles and traits involved. How should an accountant handle an ethical dilemma? Number 2, identify the ethical principles and traits involved. Number three, I said evaluate. Evaluate, that is assess how serious the threats are. Safeguard, like the next one is safeguard. Apply appropriate safeguard. When I say the last one is act, appropriate action based on circumstances. So with this illustration I'm about to say, sometimes I make random example so that I don't know, I'm just thinking my understanding. Someone raises his hand. Okay, let me finish with this illustration. Yeah, Joseph. Okay. Now you are the accountant. You are the accountant of a company. I know your class starts by 9. Now you are the accountant of the company. The managing director asks you to postpone 30 million of expenses until next year so that this profit will be higher. He tells you that the company's survival depends on getting loan. What is wrong? Number one, what is wrong? I will ask you an answer. What is wrong? Deliberate manipulation of financial reporting is wrong. That is what is wrong. What is the fundamental principles that are treating? Objectivity, integrity, and amongst others. What trait exists? There is intimidation and possible self-interest. What should their accountants do? Refuse inappropriate treatment. Discuss, escalate the matter appropriately. What if the pressure continues? Take further action. Okay, let me pause there and please, Mr. Enya, what's your question? If I can hear you. Someone raises his hand. Is it a mistake?
Please let's proceed. I've been cleared. So
Okay, great. All right.
Hello, Mr. George. Hello.
Yeah, I can hear you.
Yes, sir. Good evening, sir. Please, can you go over the steps again? Identify, evaluate how serious the threat is. Thank you. The steps you were listing out.
All right.
I didn't follow.
Okay. Okay. So I said you can put your mic now. Is there any question? All right. I said, how should an accountant handle an ethical dilemma? Number one, I said you stop. You stop in terms of intimidation. If assuming you are under pressure, you are under pressure from your management, they are trying to intimidate you. You stop the action. Don't take actions immediately. Now, the next thing is you identify. You identify the principles and the traits involved. Okay? After you don't just identify, you need to evaluate what you've identified. You elaborate, assess how serious the traits are. Okay? So if I say, how can you evaluate? How can you evaluate? How can you evaluate what you've identified? Now, is the threat at a level, or could it compromise my compliance with fundamental principles? So I started with identify the nature of the threat, self-review, consider how serious it is. These are the analysis. Consider the safeguard, evaluation. Evaluate is act. Now, evaluate is act. Is the friendship strong enough to affect my professional judgment? Okay, so the next thing I said was, what was the next step? Identify, stop, identify, what, evaluate, then check the safeguard, appropriate safeguards. We discuss safeguards, and then you act. Any other question? Whatsoever remains here is a topic on its own, and I wanted to take it as a topic because it comes sometimes it comes very different, separate from ethical question. Sometimes very different from the ethical questions. Now, I think we have oh my system. Okay. Um Hold on. Okay. We are to discuss this especially these two, creative accounting and earnings management. Then I think I will add this with I'll add with small and medium IFRS for SME, small and medium enterprise. So please, is there any question? Do you have any questions so that you can go and join your
I
next
have a
class?
question, please.
Okay.
Hello, sir.
Yes, I can hear you.
Yes, please.
I
So,
but I can hear you.
okay, thank you. Okay, you mentioned that we might have threats and can have any question. So, my question is, how are you able to identify them or differentiate what makes? Thank you.
Differentiate between what? You were breaking. Can someone else speak on our behalf? It was breaking here. How can you differentiate between
She is talking about the principal traits and what do you call it?
safeguard?
Yeah, the safeguards of such traits. How can you differentiate to know that in that scenario this
Ah,
is a confidentiality, this is
mm,
integrity, and link it to self-interest and the rest?
ah, ah. It's like you are telling me to start the class from the scratch. Oh. When you understand the concept, the definition, you under do you I started with in fact I started with ethics and why it is important. I now go to the did you join the class late? Okay. Oh, please who can help me answer that question for her? Somebody. Or are we all having the same confusion? Who can help me answer her question?
The question is not too clear, but in my own understanding, if he's trying to ask if how to identify the ethical principle, differentiate the ethical principles from the safeguards. I don't know whether it's what she's trying to ask, because this question is not straightforward. Before her line was
So
breaking.
I think maybe let's just do an assumption. I think from the time I said you need to link principles and the traits, take for instance objectivity. Objectivity can be related to familiarity traits because from being familiar, you can be unbiased. But the truth of the matter is, if you understand the concept, if you understand the explanation, if you understand the definition, if you understand the notes, if you understand what principle is, you understand the traits. Her question is like she doesn't understand the concept. That's what I assume. And how I can help is maybe she can go back to the notes, go back to the recorded class, then she can come back and if she can ask the same question, fine, they can break it down. So sorry. Please just go back to the material. Go back to the material, go back to the notes, go back to the recording class then, or you can SMS, you can DM, or you can drop it on the platform. Any question you have, just drop it. Maybe I think something relevant in the platform. That's why you add it. Just drop it there, or you can drop it directly as the case may be. Please don't pass anyone without having understanding. Remember, I said we are going to use Pathfinder to answer this question. We will come back here. Okay, so any other question? It's because of your next class. That's why I have to let it be for now, so that we continue next time. So in our next class, we will address this remaining management. Remember what our next topic is: remaining management, all those unethical concepts.